Welcome to Grow Organically, the podcast where we host candid discussions with wealth management and financial pros. Each episode, we break down factors that drive growth at wealth management firms and how organizations can continue to be forward thinkers in today's competitive landscape. Grow Organically is brought to you by Catchlight. You can access all our podcasts, including show notes and other resources to keep learning, at catchlight.ai. Dan Gilmartin is the host of Grow Organically and is the head of marketing at Catchlight.
Hello, everyone. Dan here from Catchlight. I am really excited about our guest for today's episode. Jen Abboud Smith is the SVP of Investor Marketing at Carson Wealth. Her background is Amazon, QVC, Vanguard. She and her team own the client acquisition program at Carson Wealth. She brings a wealth of domain expertise to her role. I'm really looking forward to digging into this conversation today. Jen, welcome to the program. Great to have you here. Please share a little bit of your background with the audience.
Yeah, of course. And thanks for having me. As Dan said, lots of experience at a lot of different organizations. I just love marketing. So that is why I'm here today to talk to you all. But as Dan mentioned more recently, I've been working with Carson Group as the Senior Vice President of Investor Marketing. That includes our client acquisition program, which is a program that we offer to our nationwide network of advisors and partners to help drive leads to their business and hopefully get those clients converted for them. So my team dabbles in everything, any kind of marketing effort that we can possibly do to find those leads, and really excited to chat with you about it today, Dan.
Awesome background, kindred spirits from a marketing perspective. So great to have you here, Jen. So let's dive in. I want to focus first on sort of organizational challenges. Again, kindred spirits from a marketing perspective. Sometimes it's tough to get the attention of leadership. And in particular, would love to hear how you address and how you work with your team to get leadership to focus on organic growth. And in the sector that we're in, wealth management, it seems like the inorganic stuff seems to get all the headlines. But love to hear a little bit from you how you help your team and help leadership think about organic growth.
I'm certainly in a fortunate position being responsible for investor marketing where, organic growth is a big part of what we do. And Carson sees that as a priority, but you definitely hit the nail on the head. Where you can get scale tends to be that inorganic side of things. So one of the things we do a lot, and we have constant conversations in terms of planning and strategy, but we're trying to sort of assess how our eyes can match our stomach, because every organization you talk to wants to grow. No one's going to be like, no growth this year, thanks. So we're just trying to figure out what's the right amount of growth relative to our resources, relative to our plans and capabilities. So having a lot of those conversations and really diving in to understand how we're performing, those are the kind of dots that we're trying to connect so that when we're plotting and doing long-term planning or partnering with finance to talk budget, et cetera, we're really thinking about, okay, what's reasonable growth? What's realistic? What is our appetite for growth? It's also helpful to think about, the rest of the organization that's going to equip us to have that conversation, right? So I mentioned finance, they're kind of important, right?
Right.
So
right.
really thinking about, okay, we want to grow, everybody wants to grow. Organic and inorganic are going to be part of that mix. What is that ratio? Well, a lot of that does have to do with let's talk about budget. Let's talk about the economics of our firm overall. Let's talk about how much growth did we have last year, and is that funding growth for next year? And just really kind of keeping those lines of communication open, especially with our partners in finance and others, so that even if I'm not in the room, someone who is can say, oh yeah, I know this is where marketing is heading and what marketing is thinking. So just kind of trying to have a lot of those lateral discussions early and often.
Yeah, it makes a ton of sense. Certainly with finance, support teams, sales in particular. We'll talk about sales in just a minute, and we'll talk about metrics and things like that a little later in the program. But how do you help the organization understand organic or perhaps programmatic, where it's not inorganic? It's not, I'm going to go buy this firm that's got this kind of AUM for this much. How do you help senior leaders understand what that trajectory is of programmatic?
Yeah. And there's a bunch of different ways for sure. One is, I think, the sort of age-old wisdom of communicate early and often. And, we do a lot of things on our side we do weekly business reviews. We call them WBRs, monthly business reviews, MBRs, you're sensing a theme. We do these sort of common things where we're trying to push information out, surface key decisions, tell them our goal was this, we performed this, and like, why was there a gap or delta if there was one? And just really kind of keeping that sort of drumbeat of information so that folks know how we're tracking. But it's also things like, we've mentioned finance multiple times here because, money's kind of important in the marketing landscape. I
Right.
have regular meetings with my finance team, not just to talk about because they want to know, what did you spend? Why did you spend it? But we also talk about, well, what's that future look like? We're doing long-term planning now. We're sitting here in the middle of July having this conversation, trying to start nailing down, what does 2025 look like? If I have, desires to grow this much, but finance gives me the side eye, like I'd rather know that now than get to December and be like, what's going to happen in January? Because you mentioned programmatic, you mentioned all of the partners throughout the organization. I can't expect everybody to know marketing like we know marketing. And some of the things that, still surprise me today are there are folks in the operations side of the business that think about it in terms of a calendar year or a fiscal year. And they say, okay, as of day one, you can start spending this new money, but don't spend it the day before. But in marketing, to be live January 1st, I have to know how much I'm going to spend sometime before January 1st, So just having these dialogues so that there's that expectation in place helps them to understand those nuances and the limitations or the constraints that we deal with in the marketing. Just like, they need to help me understand the way that they need to report if it's finance to our board or to others, things that I'm not going to encounter in my day to day. So it's a lot of regular communications, consistent sort of talk about the goals, talk about the misses, and then kind of give them that heads up of strategy as it's evolving.
And what we do as marketers is we build marketing programs, we have marketing strategies, and oftentimes it's an upfront investment for a downstream return. And so we have to plan that out. We have to make sure our partners across our organizations understand that there's not an immediate return on that investment, but that from a program perspective, campaign perspective, we do a lot of testing, and we look at how those investments play out over time. Speaking of organizational challenges, that the seeming conflict between sales and marketing, we talked about this a couple of weeks ago, and I thought you had some really great perspective, and love for you to share it, because I think firms like yours, there's a BDR organization, there's advisors who are often looked at as sellers. Would love to get your perspective on those challenges and how you approach the challenges that can exist between the sales and marketing organizations.
Yeah, for sure. I think you're hitting on something that probably many marketers can relate to. I've worked at a variety of different businesses that have done this in different ways. And one of the things that I picked up on that I kind of use as a tool when I'm looking, when I joined Carson, one of the questions that I asked was, how do sales and marketing work together? What does that look like? And I'm very fortunate in this role that the sales team actually reports into me. So marketing and sales are one organization. And that's really critical because I think we've all at some point or another been in the situation where, hey, maybe marketing is driving a ton of leads and we're so excited about these MQLs. Look at our volume going up. And then, maybe sales is sitting there like, yeah, but none of them are quality. Like, you need to give me good leads. Like, yay for
I've
you.
never had that conversation with a
Never,
salesperson, Jen. Never,
ever,
never.
right? Or volume's down and marketing's like, that's because we're being hyper targeted and we're going after just the right person. And look at the efficiencies we've gained by culling this down. And sales is over there like, and we're sitting on our thumbs. Where's the
Yeah,
volume?
yeah. They're not
So
good enough. They're not enough of them. Yeah.
yeah, it's either too many not good or too few we need more. And that's because when they sit in different orgs, they have different goals and they have a different kind of North Star that they're headed. Yes, everybody wants to create business value, but the actual org structure really does come into play. And what I've been able to do on my team by having them both together and truly sales and marketing, we're peers, we're colleagues, we're talking every day. It kind of creates this dynamic that's more of marketing launches a campaign and turns right to sales and says, how were the quality of those leads? Was that working
Mhm.
for you? Do we need to make a tweak? Or sales is over there saying, oh man, we have a lot of capacity right now. Do you guys want to do some inbound testing? Or how can we support you in thinking about different scripts? Or do you want us to get more specific with that new channel you want? Like, they're actually asking each other, like, how can I help you do your job better? Because they know at the end of the day, like, our goals roll up to one spot. And if we don't achieve them as a team, like, that's our performance, that's our bonus, that's our evaluation. Like, the incentive is really there to work together versus I think no business that I've ever worked in has had ill intent or, any desire to not have the teams work together. It's just a function of who you report to and how you're measured is what you are at the end of the day, and
Yeah, yeah.
it's helpful to have it together.
In our conversations in the past, you've always talked about clear communication and accountability. critically important to ensuring that the sales and marketing, if they're in the same team or if they're separate, it's clear what the roles are. And I think that feedback loop, and we'll talk a little bit more about that a little later, thinking through the funnel as we do as marketers, making sure those lines of communication are open. So if it's an advisor or a BDR or salesperson, that information about the quality of those leads, volume of those leads is coming back, because that's critical for us to help improve our campaigns. I want to shift a little bit to strategy and execution, sort of going up to the highest level. You had shared one of your approaches is plan early and plan often. Would love to hear you talk a little bit more about that. We talked about OKRs. We're big fans of OKRs on our team, but love to hear you talk a little bit more about that.
Yeah, for sure. I mean, I mentioned earlier that we do these WBRs weekly, we do these MBRs monthly, but that's like the day-to-day how and how we're reporting on what we do. It does all have to roll back up to like why? Why are we doing this? What are we going after at the end of the day? So we do OKRs, objectives, key results for anyone that doesn't know, but that's really thinking about like that North Star that I mentioned again. We sit down at least once a year and say like, what is the objective for our team and our efforts this year? Ideally, in my opinion, and you may differ, objectives shouldn't really change drastically year to year. Like it should be that nice North Star that the key results may vary. You may have different growth goals year to year, but your objective about attracting, in our case, attracting investors to Carson, like that kind of thing should be kind of your core purpose.
Right.
Knowing that enables us to say, okay, we might try this thing over here. You talked about testing earlier. We love to test. It's okay to fail, because what we're learning is, okay, that didn't help us achieve our objective. Let's go try something else. And it kind of gives us that freedom and ability to know. I can't even tell you how many times we pilot things and we decide that one's not for us. We move away from it. We wouldn't be able to do that if we had that sort of lack of that vision and that core purpose, because we'd be so worried about, oh no, I spent all that money and we got to figure out how to recoup this investment. And we'd probably hang on to things so much longer. So having this sort of North Star objective, the key results that kind of ladder down, it rolls all the way up to the top of the enterprise of like, what does the enterprise want to do? And how
Hmm.
can marketing help contribute to that goal? In our case, organic growth. But there's pieces of what the organization is trying to do, and every function at the organization knows their function. It's just a matter of connecting those dots and saying, okay, well, if we want to grow some percentage of organic, or a certain number of new partners, or whatever that goal may be, here's the piece of it that I and my teams can contribute to that. And then throughout the year, whether it's a monthly MBR, it's a quarterly discussion, whatever, we can easily then say, okay, are we doing that? Are we making that progress that we said we would make, or do we need to make pivots? And that's really helped us kind of maintain that balance of clear strategy that's not like a moving target, but flexibility in that kind of day to day to pivot where we need to.
Yeah, I agree with that last point about flexibility. We're gonna test, we're gonna learn both from a campaign perspective, but also on the sales side. Is this the right pitch? Is this the right approach to this type of prospect? So I think that flexibility lends itself to the feedback mechanism on the KRs in particular, to make them better. We use them here at Catchlight, and we look at them on a quarterly basis, continuously challenge ourselves to make them better and better and better.
Yeah, I
Um,
mean, and there's also like times within your sort of day-to-day business where you have to think about like, should I do something differently? And so with me, I just recently inherited a new team. I expanded, my responsibilities expanded a little bit. And so that was like a great, like clear red flag of, hey, team, let's do a start, stop, continue exercise. Like just
yeah,
because we were doing things differently before, maybe our goals have changed. Maybe our North Stars haven't, but like, should our KRs adjust a little bit? Like, just to like have those sort of moments of, wait a minute, let's build into like our structure the opportunity to change. Like change is something that so many people try to avoid, but like if you actually think about, there are really good times to consider change and make it happen. It's also a lot easier for your team, who's not like, well, now my goals changed again. Like,
right.
oh, we're part of a new team, we should be evaluating what we're doing. This makes a lot of sense for us to evaluate and make decisions.
Yeah, it's a pause, a check in, reevaluate, replan, and get going. And I think it's healthy to do that, so that you're setting yourself up for success the next month, the next campaign, the next quarter. I
Hmm.
want to shift a little bit to technology, and then we're going to dive into more of the marketing stuff and talk about funnels and KPIs and things like that. When we chatted a couple weeks ago, you talked about the pitfall of what gets to the advisor, and the desire to leverage technology to improve both the upstream and the downstream. I'd love for you to tease that out a little bit for the audience.
Yeah, I mean, well, one of the things our CRM at Carson is Salesforce. It's a very large tool. It can be a very expensive tool, but that's one of the places to just like know your current landscape and know where those integration points are. Because like whether we're going upper funnel and trying to think about we want to launch a new channel or campaign, or we want to get, some more sophisticated drip emails and things and like knowing that it all at the end of the day ideally should come back to Salesforce, communicate to Salesforce so that whether it's the marketer, the salesperson, or the advisor, they have the same visibility to that
Mhm.
information. Like just knowing, okay, that might rule out a couple different vendors and options if they don't have a clear Salesforce integration. Like it's kind of disappointing to say, and the sort of like innovator in me is like, oh, I'll push against it. But realistically, like that's what's going to be your fastest path to value of knowing like this is my current tool set. I know that everybody can kind of access it at these points. So what are my clear integrations? The other thing is it might save you a ton of time. Like we do a whole bunch of kind of RFPs and evaluations of the different tools because that's what we are as marketers, always looking for the new best next thing, right? But just knowing, hey, Salesforce has this whole, I mean, ecosystem of widgets and integrations and connections. Just to know what's available to you now helps you like save yourself all that time. We went down a whole channel last year of like looking at different text and chat functions, and we were using different tools and evaluating different vendors. And then at the end of the day, we're like, actually, there's something included in our Salesforce license. Why don't we just go ahead and use that? Like, duh. So there's quite a bit of like really think about the tech you're going after and know when to kind of dream big and be like, oh, I want to build this really cool thing versus we could just use this one right here. And that would get
Yeah.
us most of the way.
Yeah, I think efficiency from a technology perspective is key. When we chatted, we talked about no tech just for tech's sake.
Hmm.
There are lots of cool gadgets out there, but if they're not helping us grow our businesses, then they
Yeah.
can just become distractions.
Yeah.
So let's dive into the funnel. Let's dive into the core work that you and your team are doing. Maybe just to frame it for us, tell us a little bit about what your funnel looks like. What are the key steps?
Yeah.
And maybe, because we test, we learn, we fail, we get better. Maybe as you're going through that, help identify at what point in your funnel can you see where something may or may not be working?
Sure. So with our funnel, we basically, there's the awareness and interest, impressions, that side of things, but then they become a lead, and that's kind of the critical first step for us in terms of the funnel and the way that we look at it. From lead, we go to MQL or marketing qualified lead because we want to, do some pre-qualification, make sure it's quality. It's
Mhm.
then going to try to go to an appointment with an advisor in our case. Appointments can turn into opportunities. Those of you who are familiar with Salesforce are starting to hear the Salesforce language here.
Yep, yep.
And then from an opportunity, of course, it can convert to a client, with a funded account. That's kind of our high level. There's obviously a million different kind of micro beacons and things along that path. But as you can imagine, and I'm sure you've experienced, the average kind of conversion rate just from lead to client average can be like 90 days, right?
Yeah.
And we've seen just, within the data, client acquisition has been around for about 2.5 years now at Carson. And we've seen that 90% of the AUM that we have achieved happens in more like 5 to 6 months. There's a long tail to it,
That's a little bit of a
It's
lag for
and
sure.
and you can't most folks that I know aren't like, yeah, okay, I'll launch it today and then check back 6 months later and see how it's doing. Like that's just not the kind of time that we have. So
Wait,
we
wait, wait.
do look at it.
Marketing is not a set it and forget it exercise?
I know, shocking truth. Here's your headline. Marketing's not set it and forget it. Yeah, no, we do look for those like leading indicators, the things that are going to kind of tell us early what might be working, and then really assessing like where are the places that we can afford to wait. So as an example, we launch a new channel, like maybe a paid media vendor, we're going to want to look really early to see all right, what's the cost per lead? How many of those are becoming MQLs? And that can take, to the appointment stage, maybe give or take 2 weeks, like not too long. Like that's a very reasonable amount of time to kind of get that early indicator of is this a quality source of the kind of volume we're looking for? Something like an email drip campaign that's triggered based on different criteria, it's often folks that are already in your ecosystem. You've probably already paid for those leads in most cases. You have a little bit more bandwidth. Plus, if it's a really kind of specific trigger, you might actually need that time of 6 months or more to actually see, okay, this is really doing the thing we want to do. I mean, we have various email drip campaigns related to, oh, they missed an appointment or they never booked an appointment or so on and so forth. So depending on the goal, you might have some more time that not only can you afford to wait, but it kind of makes sense to wait in those cases. But having those leading indicators and really understanding, like, okay, if our cost per appointment, for example, is averaging in this range, in the past, we've generally seen that result in a profitable client or a profitable kind of outcome. And we do have a specific metric for that that maybe you want to dive into. But, that is a good way to kind of start to balance that. If for the most part in the history that you've seen, this leads to a good that, like A
Mhm.
to B, you can use that as a good leading indicator to kind of help you shape the rest of the funnel.
Love it, love it. So you talked about cost per lead. You talked about cost per appointment. What are some of the other KPIs that you track in your funnel?
Yeah, so those are certainly the early ones. The
Yep.
biggest one for us, obviously, we're a growing program. We do want to scale. We want to make sure we're growing the amount of AUM that we're bringing on board to Carson, but it's not just volume, right? Because then it could be, oh, get one whale, great, we've made our year. Like it's not just the amount of AUM, nor is it the volume of customers, because I'm sure we all know, like there are folks that would love to talk to an advisor, but they don't really have a lot of AUM yet, and maybe they're not the right fit if they're looking for debt consolidation or something that this is not really something that Carson offers, right? So why would I want to go after those? So we actually look at an efficiency metric at the end of our funnel. At the end of the day, it's cost per $1,000 of AUM. And we know what our target is there and we know the kind of efficiency we want to see. So that gives us that sort of universal overarching view. It is the one that is going to take 6+ months to understand, but that is the way that we say, hey, are we really operating a healthy program that's growing at the scale that we want to grow in a way that's going to be sustainable long term?
And I got to tell you, I love that KPI because it in my mind, as you said, it helps you look at the value of the relationship that you created, not just the total AUM of the client, and not just the number of clients that came in, but the cost. You're sort of creating an equal playing field. Now, do you leverage that KPI across all of your different channels? And measure them based on that? Is that sort of the primary driver for success or failure on a campaign or on a channel?
Yeah, I would say it's a yes and no because like the program itself is really measured in large part by that metric. But at the individual campaign and channel level, we take a more portfolio approach. I
Mhm.
know that we have a certain amount of, like SEO driven kind of organic traffic that is cheaper for us to acquire. And that balances out the amount that we can pay for our paid media. So while the program has an overarching target of X, we know that like within different channels, we can start to manage to different values. But, for example, we've made some really big improvements to our web experience this year. And so what we thought it was going to be in the beginning of the year, oh, target organic this and paid that, organic got better. And so it kind of bought us, additional leeway, if you will. So it's something that we're constantly managing and measuring. It kind of goes back to like some of those strategic planning points and the kind of lateral communication that I'm doing. My finance partners love that we use that metric. They just
Mhm.
love it because they know that we're going to turn things off if they're not meeting our sort of criteria and that we're going to manage things effectively. It gives them more confidence to say, oh, if you're going to need additional budget next year, I trust that you're going to spend it well because I see you managing and doing that kind of stewardship right now. Now, granted, I think the risk of it, if you want to talk about like the good and the good is certainly the accountability, and our advisor partners love it too, because within the client acquisition program, one of the unique things is the way that we make money and generate value for Carson is when the client converts. That's when the advisor pays us basis points on that client conversion. So we're doing all
Mhm.
this upper funnel marketing, all this spend, all the drip emails, our sales team, all this stuff up front. Only when the client converts does it actually generate revenue. So the advisors love that we're measuring cost per thousand AM because it means that they're getting a nice, volume that comes in for that cost. I think one of the things that can potentially kind of trip us up is if you don't keep an eye on scale. It's like any kind of productivity or economic metric. If you want to get a real low cost per something, well, just narrow down the funnel, right?
Yes.
Like do
Yeah.
less of
Right.
it.
Right.
And so that's where we actually within the program we've sort of two main KPIs, and it is overall AUM growth at a cost per thousand AUM efficiency.
Yeah, I love it. Again, for the audience, it's a cost per $1,000 of AUM acquired. I think it's a really, really clever approach. It sort of levels the playing field. But I suspect it also. You talked a little bit about the timing of an acquisition, average being 90 days, or could be as long as 6 months. all channels are different. And if you look at a portfolio approach to your marketing, like you talked about SEO, not necessarily set it and forget it. We have to tend to SEO. We have to develop new content. We have to be smart about how the search engines are looking at our content. But it allows you, from a portfolio perspective, I think, to not only look at the time to acquire, but the channel through which you're acquiring and the investment there, and then be able to rationalize that across a broader portfolio. I think it's a really smart approach.
Yeah, I mean, and everybody's appetite may vary. For example, we really started leaning into our SEO investments, I would say about 2 years ago, knowing it's a long haul to do SEO related work, but
Sure
also
is.
seeing like the more that we do there means that we can afford to do more of this testing and this paid media stuff. And my director of consumer content was just talking to me last week about like, oh my gosh, we have like 70% stuff on first page and like all the great things that are starting to come. And I'm like, that is amazing. And I know you've been literally working on this day in, day out for like 2 years.
Yeah.
It takes that long. It really does. But it does, I think it gives us the ability to like have that portfolio approach. When this program very first launched way back when, it was very direct response. It was very, hey, we need to
Hmm.
spend dollar X to get result Y. And in the beginning days, you want to get a quick win, of course, but that really does create that like your scale is going to be so limited if you're not kind of trying those new things, and you have to have some of that appetite or risk appetite to be able to say, okay, that might not work, and I just spent money on it. So that's where it helps us kind of balance everything, because that means we know we need to invest in organic so we can afford to do more paid and do more testing, and it kind of keeps us accountable across all the different avenues.
Love it. And it's perhaps a way to think about the types of clients you seek to acquire based on perhaps team objectives. Are some folks looking for more mass market versus high net worth? That's going to affect, I would imagine, that cost per $1,000 AUM acquired.
100%.
And then the LTV of those clients is going to be a little different. So I would imagine over time you start to look at that cost per thousand AUM acquired relative to that LTV, and that helps you continue to balance out what that investment looks like.
Yeah, 100%. And we're seeing some of that in our kind of advisor partner network that we serve as well. There are advisors who are like, my minimum's 3 million. That's what I deal with. Like,
Right.
okay, we'll
Yeah.
see if we can help you there. And then there are others who are like, I just hired an associate advisor. I'd love to give them some at bats, and really understanding our mix and being able to say, hey, we can go pay for leads and work with, partners like the Smart Assets of the world to like really fill the funnel for someone like that. Whereas we're going to need to have a much more targeted strategy. We're going to have to bring in content, maybe even direct mail to really hit like that $3 million advisor and, give them the clients that they need. But understanding our cost per thousand AUM overall allows us to know like, okay, I can probably spend a little more to get you that 3 million as long as we're successful. I can
Yeah.
spend
Yeah.
a
But
little more to get you that one.
it's a different campaign. It's a different approach than perhaps paid leads. So
Hmm.
it's
Yeah,
a
especially
great
if we were measuring them
equalizer.
all to the same CPL. Oh, oh.
Oh yeah. Yeah, impossible, impossible. Awesome. Love that, Jen. Thank you. So last question for you. What advice would you give Jen of 5 years ago? How best to position Carson for organic growth?
Yeah, I love this question because, like, personally, 5 years ago, I was working at Amazon, living out in Seattle. I had just had my son. So, like, Carson's organic growth was nowhere on my radar
It was a
whatsoever.
different time, a different
A
world.
completely different Jen at that time.
Right.
But one of the things I will say that I have learned, and actually, in that 5 year horizon is when I moved west and from the west to east, and I started working with Vanguard at that time. And actually, Vanguard is one of the places that I really, I think, learned this lesson that has helped me. When I started out as a marketer earlier in my career, and I think many of us, like, I was worried about the discipline of marketing. I wanted
Mm.
to learn everything about this channel. I became a Google advertising professional. I wanted to know how the tech enabled it and what the metrics were, and like diving really deep to become an expert in marketing. It wasn't until around the time that I got to Vanguard and started working in finance, funnily enough, that I realized I need to actually be thinking about the end of the day business outcome and
Right.
not the marketing outcome. I was so concerned about impressions and cost per click, and like, whether it was when I was in retail, like product conversion, but not actually like when I was at QVC, for example, our goal was new customer acquisition. And so we looked at cost of new customer acquisition. Great. But I didn't think to ask the business question of, well, what kind of customers and which categories are the most profitable for us?
Mm,
And today in the world that I'm in now, it means that I showed up day one asking, well, how does sales measure the way that marketing delivers leads? I wasn't stopping at the marketing piece of the picture. I was actually saying, well, what's the next downstream and the next downstream? And it took us to that place where we now measure cost per thousand AUM because we wanted to know like the end throughput, what is that goal? Because that, of course, like not only does it help us do things that enable that, but it helps us show the business like they are now our advocates. They are the ones that are talking to finance and saying, marketing, you should do more of this. Or I don't know if we can take on that goal because I need marketing to support me in doing that. And like
right.
it created advocates throughout the organization where before I've been in those worlds where we have that like sales marketing dynamic and everybody's like, well, if only marketing was getting us more. But in a world where it's clear marketing is driving this particular business value, everybody kind of gets it. And so I credit some of the leaders that I had at Vanguard and just the scenario that I kind of stepped into here at Carson with a lot of the success that we've had, because that connection to me is like you know how they say like what got you here won't get you there. That
Yeah.
was like the first part of my career. It was all about marketing. But when I pivoted and actually started thinking about the business impact and how to measure it in terms that the business understands, that was like the executive up level for me. That's what got me to that next level.
Love it. Love it. So I'm going to try to summarize, but it's basically going from a cost per click to full funnel analysis and understanding bottom funnel impact on the business. And
Yes.
then connecting that knowledge and insight to the conversations with our friends in finance and other organizations. So I love how you brought it full circle. Jen, thank you so much for your time today. It was great to have you on the program.
It was an
And with that,
absolute
I think
pleasure.
we're down here. So thanks again, Jen. Appreciate it.
Thank you for listening to the Grow Organically podcast. If you enjoyed this episode, click the follow button to be notified when new episodes become available. Visit catchlight.ai, where you can access all our podcasts, including show notes and other resources to keep learning. This podcast was produced by Catchlight Insights, LLC. It is for informational and educational purposes only. The content of this podcast does not constitute an offer or recommendation of any securities and is not intended to provide tax, legal, or investment advice. The views expressed are those of the speakers and not necessarily those of Catchlight or its affiliates, and are as of the date indicated, based on the information available at that time, and may change based on market or other conditions. Catchlight does not assume any duty to update any of the information. Catchlight and other third parties mentioned in the podcast are independent entities and not affiliated. Catchlight does not endorse any investment advisor or provide advice or recommendations to any prospective or existing client of an investment advisor as to the selection or retention of that investment advisor. The information is not intended for any person or entity in any jurisdiction where the distribution or use of such information would be contrary to local law. Third-party trademarks referenced herein are the property of the respective owners. All others are the property of Catchlight Insights, LLC, copyright 2024 Catchlight Insights, LLC. All rights reserved.